Okay, welcome to the fifth video in our cost segregation video series. In this video, we're going to focus on how are the benefits realized? How are the tax benefits realized when you perform a cost segregation study? What are we talking about? Well, we break it down in our feasibility studies up front before you spend any money on an actual cost segregation study, which is really the service that we provide. Before you do that, we're going to provide a feasibility analysis that's going to show you what would your return on investment be. And so typically we find this is just an average 1 in 20 or 1 in 15 to 20 in terms of return on investment. Now, what we're talking about is the cost of the cost segregation study. And again, there's a lot of variables that go into that, but that's what we would work up the number on the cost of the study, and then we would work up the estimate, a range of the actual tax benefits. We'd break it down year one and then the remaining of 5 years. So it would be broken down over 5 years. Year one would be the biggest benefit because you usually have catch-up depreciation unless you just bought the building. But the bottom line is we're going to show you this return on investment and make it a very simple decision for you at that point. Okay, so just breaking it down, Cost Seg 101, again showing you the real high level of how these benefits are realized. So you have a property that you purchased for $2 million. That's the tax basis number. And then you look at the additional depreciation now that you can accelerate. In this case, it's 30%. And then you look at the assumed tax rate. So the net tax benefits in this case would be $240,000. And so, a $2 million building, who knows what a study it would vary for every type of building, but yeah, it wouldn't be unusual for a study to be $10,000 or less to actually execute. And so that's 1 in 24, $240,000 tax benefit, for a $10,000 investment in a cost segregation study to enable you to take advantage of this tax benefit. The way that you take advantage of it is it's a single IRS form, the 3115 we mentioned in an earlier video. It's required to realize these benefits. Your accountant can take care of this. We can take care of it as part of our service. We like to work with your accountant, though. It usually is a requirement anyway. Usually they'll prepare that for you. And again, there's no need for restatement or amending tax returns, and it can be taken advantage of immediately, as I said. So there's various property types, and we like to break down, what is the typical percentage of acceleration that you can expect. So you'll see that, for instance, golf courses 20 to 40%. Typically, you can accelerate 20 to 40% of the value. Retail 20 to 30%. Warehouse is a little on the lower side, 5 to 10%. Shopping center 10 to 30%, hotels 20 to 30%. So it varies. These are based on all the studies we've done. We come up with estimates. You may find it interesting to kind of check your building out against that table. Okay, the next video we're going to go to is how clients can actually actualize the benefits. What are the steps you're going to need to take to actually get the process going? So I look forward to covering that with you in the next video. Bye for now.